All right, hey there, good afternoon. Well, God, dog, I always say that. Maybe we'll change this to an afternoon show at some point. It's late morning here. It's a few minutes after 11 a.m. Central Standard Time here on Friday. What is it? The last day of September 30th, 2022. Great to have you all checking in. Hopefully y'all are doing well. Bitcoin pumping a bit this morning. I think more notably Bitcoin, going sideways, rallying a bit. As the stock market's actually gone down. So, if you're the type that's all, been watching that coupling between the stocks and the stock indexes and Bitcoin, now you see something different happening, right? So I guess we'll see what that means. But, for us, there's no surprise in it, right? I mean, we continue to watch for potential downside, and we've got levels we need to watch to break out to the upside to really kind of start adding some confidence to the idea that maybe the June bottom was in. But for now, price continues to refuse to drop lower. So we'll see what that means here. We had that the Fed's favorite inflation gauge. I posted that here on Twitter there. Anyway, that came out this morning here. Excuse me. A little bit in my throat here, but so that rose this morning a little bit higher than what the polled economists were expecting. But as well with those other kind of things we've been watching over the last few months over the summer, right? We got some rise, and then we had drop, and then we got some rise. So it's possible that top may be coming in as far as rising prices, kind of inflation thing goes. We've had the Fed raise the interest rates here 75 basis points 3 times in a row now. Will they make it a fourth? We'll find out. We see the job, the new, the unemployment, I guess what we're trying to say here. We saw that rise a little bit, but that was, probably due to the fact that we've got more people actually claiming that they're unemployed, right? So that they can get, benefits. Because remember, guys, what the unemployment rate takes into consideration is not how many people are actually employed. It's how many people are actively looking for work that don't have work. If you're, out there trading, for instance, right? You're not, and you're not looking for a job. Well, you're not included in the unemployed, right? If your trading is kind of falling off and you decide you need to find a job, all of a sudden you're added in there. So, we've got all this kind of going on now as we run into, the last quarter of the year here. So things should, I think, kind of get a little bit more interesting as we've got here. Who's here already? Nevlugia and Hank, Data. Good to see you guys. Baltazar is here as well. Melissa, good morning. Who else is this? Always in the red. I think I know who that is. Yep, Deadly123. What's up, man? But yeah. So, we've got a lot going on. Now, what else do we have? Over the last week or so, we've seen the Bank of Japan and the Bank of England there intervene, in their markets there. Is that enough, to kind of reverse course for the dollar? Well, we're going to take a look at the dollar today, and it looks like it might be topped out. And, it comes to the area where we said that, if it continued pushing up, it was that supply structure EQ area where we'd be looking for it to target. And that's kind of where it's pulling off of right now. Now, still too early to say, yeah, it's definitely topped out. But, we've got some good pullback so far. So we'll see if we can continue that, right? Let me see here. God, man, so much going on there, right? I think, well, that's what we got right there. So we can jump on this. By the way, if you haven't joined us yet, you can do so here at howtotradetowin.com. We'd love to have you there. Man, we do chart requests. We've got 3 live streams, educational live streams every week. Mondays are Wyckoff, and we take a look at current charts via the Wyckoff method. We've got price action on Wednesdays. Plus, we've got about 50 somewhat different, at least 50 different rules-based systems that I've taught over the last few years to our members that you also have access to on that as well with little descriptions. So you can kind of read the descriptions, decide which one you maybe want to watch. Let's see here. So those are every Wednesday, and then every Thursday we do Elliott Wave. Again, take a look at current charts and, looking what the Elliott Wave may say on it, as well as discussing those important things to remember as you do Elliott wave there. So lots of rules and guidelines to remember with Elliott wave. But the more you do it, the easier it is to remember them all, and then things become a lot easier. Listen, guys, here's the thing. I've probably purchased more educational and systems and whatever than most everybody else out there. Because I continue to look into it, go, well, is it that these systems don't really work, or is it more maybe that the trader doesn't work, right? And what I've found over the years is that many of the systems that are for sale out there, or these styles of trading, actually do work, or they work to some degree, right? But the biggest issue with them is that you have new traders coming in who have no clue about the basics of trading, risk management, stuff like that, and so they get in over their head with all these different ways of trading, and then it doesn't work, right? And they don't put in the correct effort and time to learn it and practice it. It's like any other skill, guys. You have to put in the time and effort, right? So, I keep referring to those of you that were around in, say, 2017 for Bitcoin, right? The crypto market. And you might remember that pretty much every week there was a new flavor of the week as far as trading goes, right? Wyckoff one week, Elliott wave the next week, And, everybody kind of get in there. They just kind of half-ass it, right? They do it for like a day and a half. Never really learned how to do it. And then they do it for a day and a half. And they go, oh, it doesn't work, right? Yet it did. If you're new to trading, take all that into consideration. It's nothing you're going to learn overnight, guys. I don't care what somebody's telling you. It's nothing you're going to get good at overnight. As a matter of fact, most likely it's going to take at least a few months, if not a few years, to become really consistently profitable with it, in a good way. Because the markets are something that you have to do. I mean, you have to get in there and do them to feel them. They're organic, right? Your markets move, they live, they breathe. And, each market's different. So you can get into the crypto market, which is going to feel different than the equities market. Though, I don't know, maybe over the last year it's been a little different. They've been about the same. But, it's going to feel different than the Forex market or precious metals or whatever. Commodity markets of different types. And so, you have to kind of get in there. Even the futures market, it feels different than just the regular stock market, right? And so it's getting in there and getting used to it and feeling it. And, that it just takes time, guys. You've got to stop. I know a lot of you, probably most of you, came in here like the rest of us, right? And you thought, man, everybody's making all this money. It's so easy. It looks so easy. I'm going to jump in and do it, right? And then you get in and it doesn't come easy. It doesn't come fast. And then you kind of just really don't put in the effort, to learn it, right? But that's the way most of us are with most things in life, right? We try to do just enough to hopefully understand it a bit, and then we can say, oh, we know it, and then we don't really do much with it, right? So, if you want to be a trader, I guess what I'm trying to say here is if you want to be a trader, you can definitely do it, and you can definitely be profitable over time, but there are things you have to learn, no matter what your system or style of trading is, that is the same across all trading. And if you don't get those things down first, the rest of it won't ever make much, it won't amount to much of a hill of beans with it, okay? So anyway, that's the thing we always talk about, the thing we always go through, Texas West Capital. It'll be one of the things I discuss, at the Web3 Expo there in Vegas here in just less than 2 weeks, guys. So I'm going to do a masterclass over there, and then it looks like I'm going to be doing a panel. I think they were saying with Scott and Crypto Burb, I guess. I don't really know Crypto Burb, but I've heard of him, seen him online. So yeah, so it should be a good time anyway. Again, guys, if you're there, let me know. We'll try to do some kind of meetup or something as well. But yeah, so you can do that here at howtotradetowin.com. We'd love to have you there, guys. All right. Who else is showing up here? Anybody else open up here? Let me see. White R21, what's up, man? Good to see you. Andrew Bennett checking in here. So morning from a gloomy San Diego. Isn't every day gloomy in San Diego? I'm just kidding, man. Let's see here. So yeah, excuse me. So with Bitcoin, I'm kind of giving, our members a couple of different ways to look at it, right? So if the bottom is in June, then we've got the black count up top here, right? If, however, we're going to dip on lower here, then this red count says that, right? Now, here's the thing about this red count. it's pretty close to being invalidated, right? So we'll go with this first. This bearish red count says, okay, the bottom's coming for wave 5. This is wave 4 up here, right? This August 22 swing high up here. And so this move down then appears to be an ending diagonal, right? So you get an ABC is 1, 2, ABC is 3, 4, A, B, excuse me, and then we'll have C, right? Well, we've had targets changing here on C as wave B kind of plays out here. Even as early or as late as this morning, this morning's update, we were looking at the possibility that maybe this was wave B is a triangle, so like A, B, C, D, and then E. But as you can see here, we've broken out, so that triangle is no longer valid. So again, looks like maybe A, B, and then we'd have to have a C here. But here's the thing. If we rally and break out above this swing high up here, around that 20,383 kind of level, that's going to invalidate this ending diagonal. Now, that doesn't mean that, you know, there is no bearish scenario. I mean, the possibility, as I've been talking to our members about, is that rather than an ending diagonal here, maybe this is one large triangle, right? So you get A, B, you work in C, then you'll have D, and then you have E, right? So that's still possible. Unless we break out way up here at that, whatever this is up here. It's around 25,000. What is that? Around 25,215 or so. 25,214 and a half. If we break out above that, then, okay, your bearish scenarios for the most part should be out of your head, right? As far as the bullish side goes, and by the way, if this is an ending diagonal here, then wave 3 here is shorter than wave 1, which means wave 5 has to be shorter than wave 3. So if this holds and we get this, yeah, then basically wave 5 would have to end prior to that 1527.5 area. Would have to end prior to that. Now, in terms of what does that mean for this as a structure, I mean, so, you know, that would basically print a spring. I would expect a drop down and then a strong rally back up. Kind of catch your breakout traders here, get them underwater instantly, and then they are all rushing to, you know, to cover their shorts and go long, and then it gives you that nice big move up, right? So that's what I you know, am looking at us possibly seeing here on a breakdown, but we have to actually break down, right? And so right now we've got a lot of sideways. Price is really kind of refusing to go down there, right? I think right now, just in terms of things generally here, let me make a copy of this real quick so I'm not messing with our chart here for our members, right? Kind of change all this back down, and then we can just kind of mess around with that other chart. All right. Here we go. So, you know, basically, what does it come down to? So basically, it comes down to this right here. We need to break out this local swing high here, which is right around 20,383. Then we have to break out above this one here, 22,800, and then this one up here at 25,214 and a half. Okay? Big picture, guys, that's really all you need to know. Okay? In order to say that the bottom is likely in. We need those 3 steps. Okay? If we do break down through the swing low here, then of course that ending diagonal is in play here, and we look for a dip down below the swing low here. Now, that doesn't mean it can't break down lower. If it does break down below that 15,727.5 area, then what that tells us is this is not an ending diagonal in the way that we've got it written there. That's all it tells us. But, you know, you have to have something if you're trading, right? You've got to have some idea of what you think may be going on there. And so that's what we're kind of looking at. Let's see here. This is the daily here. You can see that we're right here just about, just here in neutral, 48.5 or so on RSI. Stoke RSI, what is that? Is that, yeah, that's topped out there at the moment in overbought. But again, you know, with it being, you know, the daily, you can spend a lot of time up there, up there overbought for a while as price continues to move. So really nothing going on there. But I mean, at the end of the day, guys, we are range bound here from about a week and a half, about 15 days, 2 weeks right here. We're range bound right here as well. So if you wanted to go, oh, well, why can't, somebody give me a definitive guarantee? Well, first of all, there are no guarantees in trading, right? There's just no way we can possibly understand all the different possibilities that relate from all the different decisions that branch out from each other, right? Which is why risk management is so important. But when you're going sideways, it just, it kind of gives you multiple ideas of what could potentially be happening because you don't have a trend. I mean, it's a lot of new traders get upset about this, but it's such a simple thing when you actually sit down and think about it. You don't have any real idea of what's definitely going to happen here because there is no trend. The trend is sideways, right? I mean, we're sideways for 3+ months here now. 3.5 months. We're sideways, guys. So, as that develops, again, it gives you a possibility for a move up, possibility for a move down. So it's important just to know where those validation and invalidation levels are, right? So as long as this holds here at 20,383 and 15 cents there, as long as that holds and we break down, well, then the ending diagonal count remains valid and remains likely, right? If we break out above this, well, again, all of a sudden that takes us above wave 4 there, right? Now, does that mean that we can't have maybe a larger wave 4 still in progress? No, we could still have that, right? So we could be 1, 2, 3, and then maybe like a WXY here for 4, right? So we can still have 1, 2, 3, 4, and then 5 coming down. But if we continue to break out above this is why this is that second level we need to watch. This is that 22,800. If we break out above that, well, then that ending diagonal no longer makes sense at all, right? Because you can't have wave 4 breaking out above wave 2 here, right? So 1, 2, 3, 4 has to stop before. If you break out above that, it's not. But then again, the other possibility is maybe this is a large triangle for wave 4. A, B, and you'll get a C up here probably toward this 23.6 area. Then you'll have D, and then you'll have E, and you'll have a thrust down. Now, here's the thing. Even with that as a triangle, the likelihood is still that we just get a breakdown below the range low here and a spring back up. So just like if we're looking at this as an any diagonal in wave 5, boom, and break up and come up. Same thing with the triangle. We get a thrust down just below wave 3 here and then to complete wave 5 and then back up. I still think that's more likely at the moment. Now, again, that could change with new information, but it still seems that if we're going to break down, as I've been saying for quite a while now, that would be the most likely scenario, I think. But here's the thing. If we continue to break out here, and we break out here, and then we break out here, well, your bearish scenarios are, pretty much gone at that point. It's much more likely that the bottom is in at that point. And you have potentially a double bottom here, a bit of an Adam and Eve kind of double bottom, right? Which gets us up here around this 31,000 area, initial target. Right? So, I mean, that's kind of how I'm watching at the moment. We're going to see if we get that played out. But here's the thing. If the dollar is topped out, if the dollar is done, what reason does Bitcoin, what reason do stocks have to continue pushing lower? I mean, in any significant manner, right? I mean, it could take a little bit for things to kind of level out, and reverse, but you take a lot of that downside pressure off of risk on assets, right? If the dollar is no longer rallying. Again, if the dollar's dropping off, it's because money's being pulled out. Dollars are being pulled out of that DXY, right? Dollars are being pulled out of it. The other currencies are getting stronger, right? And so if that's happening, then that money, tends to go elsewhere, right? Usually, when the dollar's pulling back, it usually tends to mean that the dollars are being pulled out and going into more risky assets. Remember, your dollar's your safe haven. So like I said, over the last week, we've seen the BOJ and the BOE both intervening in their markets, right? And the discussion has been that the BOE's recent intervention here probably kept pensions from crashing, from just dying off, right? A total meltdown in the pensions market, right? Which would have really, really screwed a lot of people. So right now with the dollar, I mean, this is that area we were looking at. This is that area from down below that I said, as long as it continues to go up, generally this is going to be that area we're going to look at, right? It's that large time frame EQ there, right around 114.34 kind of area. And we just, it looks like ending diagonal here. So what do we have now? Well, now we have 1, 2, 3, 4, 5, and then we've got this flat correction, it looks like here. And so we'll look for a breakdown below 111.576. Now, if this is a 1, 2, then 3 has a minimum expected target of 107.750. If it's an AB, and say this is maybe wave 4, and we still got wave 5 to go, well, in that case, that would be A instead of 1. This would be B instead of 2. And this 109.634 area is where wave C would equal wave A, right? And so that's generally first kind of target we look at in an ABC. Secondary target, to me it seems much more often that we actually hit the 123.6, which is 108.919. So yeah, so that's kind of where we're watching here. But if we're getting down here around this 107.763 area, well, or 750, once we're getting there, that right now this month is the daily pivot for at least till the end of the day, right? If we're getting down there, it's most likely 1, 2, 3. And so then we get a 4, and we get a 5 down here, and then we get a larger, 1, 2. But it starts looking a lot more like the dollar may be topped out then. And then we're looking mid-90s at least, right? Mid-90s at least, depending on what degree of completion we're done up here. Again, with the dollar falling off, that takes off that downward pressure on risk-on assets like stocks and Bitcoin, cryptos and whatnot. Let me see here. JRP checking in from the UK. What's going on, man? Let me see here. What you guys got going here? Oh, you guys are talking about Forex brokers over there, right? Unfortunately, I don't live in the UK, so I don't usually have a good answer as far as brokers and stuff to use over there. But man, we've got so many people from the UK and that area over there in TWC that if somebody's coming from over there, it's real easy to find out who's using what and if it's worth it with that. So let me see here. Do I have any changed views on the interest rates in the U.S. and EU if we are nearing a top or the central banks are still intending on rate hikes? Oh, yeah, well, no, we're still going to have hikes. We're still going to have interest rates rising. My argument from the beginning of this year was that, come around September here, we'd see the last, that the summer was going to see the big rate hikes, 75 basis point, maybe 100 basis points, right? And that by Q4, we would start looking at, they would start scaling back, right? So right now, I still think that we probably get a 50 point base, I can't even say it, a 50 basis point rate hike next month. But we're going to have to see how does that, the two things we always watch coming right into it, right? How is unemployment and how is CPI? We're going to have to see how those two things turn out. Maybe we have one more 75 basis point rate hike, but I think we're probably either done or just about done as far as that goes. And then we'll see them pull back. So 50 basis point rate hikes and then 25 basis point rate hikes for a bit. And then finally, getting to the reversal of that Fed pivot, right? But, there's only so much the Fed can allow to happen here to export off across the waters, right? Without screwing everybody in the world, including ourselves, as far as things go, right? So the central banks, even though they work independently for their, for the countries that they're with, right? They still have to consider what effect what impact would the things that they're doing have on other countries potentially, right? And so, yeah, again, the Fed is always playing catch up. It's always behind, right? It's never proactive. It's always reactive. So what it tends to do is it tends to worsen the things that are happening. It comes in and it does things when things are already reversing, right? Which just kind of exasperates the whole thing that's going on at first, right? And that's usually what we get. But yeah, I mean, I don't see any reason to really change it at the moment here. Like I said, it's still possible we could get that, one more 75 basis point rate hike. But it's really going to be dependent on what that unemployment. If we have a surprise unemployment to the downside and also a surprise CPI to the downside, I don't think there's any reason not to think 50 basis point. Right now, if we look at the Fed Watch tool here, markets have dropped considerably over the last week. They were almost around 80% for a 75 basis point rate hike. Now this week they're down to a 40, almost half and half here, 50 basis point, 75 basis point rate hike. If you guys don't know, you can get this right up here. I'm going to put that link in there for you in case you've never used it. And all this is basically traders gambling, traders betting on what they think the rate hike is going to be. So again, we're looking right now. There's a 47.5% they believe chance that it's going to be a 50 basis point, 52.5 that it's going to be 75 basis point. I mean, that's basically a wash, guys. But the important thing from this is that it's down from 82 or 83% chance of a 75 basis point hike a week ago. So it continues to trend down. I've been watching this all week. Continues to trend down. So we'll see what happens next week. But no real big move on it. As a matter of fact, it's still coming down in spite of today's the inflation number that came out today. So interesting, right? But it tends to be in line with what what I mentioned at the beginning of the year and how I thought this year would play out. So we'll see. We'll see if we can get that. Let me see here. So that's kind of where we're at here, guys. As far as Bitcoin goes, dollar goes, right? Let me see here. Let me find that chart I have here. Where's that chart I've got? Is it this one? Yeah. So this is remember, this is that chart that I was looking at that I kind of I don't know if this was the exact chart. But where I was looking at the BLX over, the history of Bitcoin over the last, 12 years or so, and looking at the similarities in the RSI and Stochh RSI and price action and whatnot here as compared to where it was the last two times it dipped below 0, right, or below 20 here, right? It dipped into oversold on the weekly. RSI did. And so, it was here in June, and then it was December of 2018 at that bear market low. And then January of 2015 at that bear market low. And so, everything is still working out the same way. Your hash ribbons are the same, more or less. Your RSI, your Stochh RSI are still the same. I think it's possible that we could see a double bottom print here. And now, even if we dip down below, even if we were to dip down below, it would, and we were still to stay there at 16.5 or something, we're still looking at a double bottom here. And that gives us a pattern target here if we break out above the swing high at 25,198 and 61 cents here on the BLX. If we break out above that, that should confirm that double bottom there. And then we got a pattern target up here around 35,740. Based on the height of what this would be here, right? So, the other thing we can look at here on the weekly, look at the difference in volume here. So, as we came down to last week's low there, right, you can see that we had more volume than the week before, and it's a good bit of more volume, right? But the week before, we had that, if we look up here, it tells you how big that candle spread is, the candle body. It was $2,419.71. And then last week, it was only $616. So basically, you're looking at 25, just 1/4 the size of the previous week, but on more volume. So what does that tell us? That tells us quite a bit more effort here and significantly less results. You want to watch now and see if we get some follow through on a breakout higher locally here, because that's a pretty good indication that may be a bottom on that. Maybe. So we're going to see. Also, we can look at this low right here compared to the previous swing low over here, and you see the volume's a lot less than what we had here. And so generally in ranges, that's what you want to see. If you expect it to be accumulation or reaccumulation, you want to see that as you hit those new low, you know, the comparable lows here toward the range lows, that you're doing it on much less volume. Because what does that tell you? That tells you there's less selling going into it, right? So you're getting, you know, much less volume here at the bottom. It's less selling going on here than you had over here. Again, we've already talked about the idea that this was a secondary capitulation here. This being a first capitulation, right? This being retail capitulation. This being Three Arrows Capital induced capitulation, right? Voyager, stuff like that. By the way, you guys heard FTX got Voyager, right? And it looks like Voyager people are going to get their money. You know, if you had money in Voyager there, it looks like you're probably going to get it now as part of that deal. But yeah, so I mean, you know, retail capitulation here, and then this is the capitulation based on that Three Arrows Capital nonsense. You know, took down Voyager, Celsius, all that kind of stuff. And so right now it's looking good. So we'll see what happens. No guarantees, obviously, but you know, if you're a moving average person, you want to see a close, especially a strong impulsive breakout and close above this 200-week MA right here, which is moving average, which is right around, right now, right around 23.5. You want to see a nice impulsive breakout and close above it, and then you want to see follow through higher. So, yeah, I mean, you know, some possibilities here. We got the descending resistance here that we're coming up to as well. So, you know, we'll see what happens with it, but definitely some possibilities. So don't write it off too soon. Wait to see what happens here, right? Lewis Winthorpe III, what's up, man? He says, heard the UK mention in Forex? Question mark. One option is Pepperstone using CFDs. They also cover the indices, commodities, etc. Yeah, if you guys are outside the U.S., if you are not U.S. based, you can trade U.S. stocks through contracts for differences, which are usually offered by these a lot of these Forex brokers. So you're not actually trading the stock itself; you're trading the contract for difference, but the CFD. But you know, it would be as if you were trading the stock. So you can you can get on that U.S. stock movement if you want through those CFDs. Sure. So yeah, so you know, again, still kind of looking what we got here. We still got the hash ribbons here expanding there. Haven't got the blue buy ball here yet. You know, we haven't got that yet. But you know, we'll see how this turns out here. Let's see. Let's look at Nasdaq Composite here real quick. Oh, that was not what I was looking for. This is like old, it looks like. Let's see here. I think I grabbed the first one instead of what I just grabbed that first one. Can tell by the colors that's old. All right. So we got a decent rally up here into this previous gap area. So we'll look and see if we can get a pullback and then a break up through that gap. What we need to see, guys, is an impulsive breakout above this swing high right here, this 11,101.5. If we can get that, you know, I mean, you've got a nearby target kind of. I mean, we'll draw this on here. We've got this 1 hour supply structure up in the wick here. So if we can get impulsive breakout above there, we should be good to go up toward this, potentially toward 11,491 or so. You know, at least the lower half of it. Most often we do get the break to the EQ. And so if we break out above the swing high there, we've got what's currently the daily pivot. That'll change obviously next week, but it's this previous swing high area up here right around 12,270 or so would be the next target on that. And so, you know, that's just the Nasdaq there. Your E-minis, I think, are looking pretty similar. Yeah, the E-minis. So the Nasdaq and the Dow broke down to a new low. The E-minis here did as well, but I'm talking about more locally here. They didn't. So everybody kind of broke down with the big move, but then locally here it looks like E-minis did not. If we look at this, based on this breakdown here, this would have to be a 1 and then an A, B, 1, 2, 3, 4, 5, C as an expanded flat. So it have to be a 1, 2 to head up. But really what we're looking for, again, is a impulsive breakout above this swing high right here at 3751.25. If we can get that, that opens up the move up here to around 38.90 or so. If we can break out through this kind of 3900 area impulsively, that should have us going up here around 4160. If we can do that. Let me see here. Beak Vape, what's up, man? Yeah, I don't think we're going to hit all-time highs with anything this year. But I think it's possible that that things are setting up to do it next year. We'll just have to watch what continues to go on with the dollar. That's going to be the biggest kind of canary in the coal mine there to let us know what may be happening. But like I said, if the dollar top is in there, well, there's little to no reason why stocks, which individually stocks, especially things like tech, are so beaten down already, 78, 85%. There's little reason why they should continue further, right? Bitcoin itself has come down significantly from that, 69,000 swing high as well, all-time high there. So, without that dollar pressure coming down on them, there's little left out there to really not, to really kind of keep pushing them down, right? Taylor Ryder says maybe another all-time high for ribeye and tenderloin. Big Vape. I think it's too early to say whether we're going to have some kind of recession or depression scenario next year. I think it really kind of depends on what's going on right now. This kind of where we're at with stocks, with these stock indexes, and where we are with Bitcoin having potentially bottomed in June. I think that really goes a lot to whether we're going to have that next year. I think more so than anything else. But breaking out above these August swing highs here for the stocks are going to give us more of a possibility that next year we get a new all-time high for the stock indexes. While we remain below that, overall bias is still to the downside. Yeah. Locally here, again, we can get some kind of movement up potentially, as long as we're breaking through these levels that we need to get through, right? So the Dow is kind of the same way here as the E-minis there. And, oh my gosh, there we go. And Nasdaq Composite there. Dow looks a lot like the E-minis there, doesn't it? So right now we're looking for a breakout here above 29,373.48. That should give us a chance at this swing high here at 29,811 and 78. An impulsive breakout above that then opens up again the move up here toward maybe this 30,800 area, breaking out through that, through 31,000 here, should give us a rally up here toward that 32,450 kind of area. So, I mean, that's how I'm watching this as we go up there. Again, potential Adam, Eve double bottom here. So we'll see if we can get that breakout through. I mean, if we do, pattern target based on the height of that pattern. Breaking out above this swing high here should, God dog it, should give us a target here of about, it's right up there, the R1 pivot, the current 1 hour R1 pivot, right? It's right there around 30,665 based on that, which just takes us right here, about centrally located in this supply structure here, right? Supply cluster going on here. So, if we can get that, that's what we should be looking for. Beak says the Dow Jones, the S&P 500 did not hold the June lows, but the Nasdaq did, which seems like a good sign for a big move up. Well, again, remember the Nasdaq is really tech heavy, right? And as I've discussed here weeks back, the fact that tech stocks are down, 80%, seems like they're going to have, another push higher. Because if this is wave 3 heading down, we should see a big move down. Well, what does that do for stocks, right? What does that do if you're in the Nasdaq and you're just getting wave 3 down, but your tech stocks are 80% off those all-time highs already? It doesn't make a whole lot of sense, right? Where do they go? Will they all just go to zero? No, that ain't gonna happen. Yeah, some obviously going to have business, but I mean, the idea that that all these large techs are going to continue to drop down to zero doesn't make a whole lot of sense, right? So again, this is something I talked about weeks back. So if we look at that, well, I think that's one of those things that adds to the idea that maybe we might see another all-time high before we finally get the real move down, right? Which would mean that our current all-time high is nothing more than, wave 4 or wave 3 of the final fifth wave, or, well, I mean, that's what it would be. It would be 3, and the current pullback would be 4, and then we'd still have wave 5 to go up. The question is, would we just get a wave 5 that breaks out just a bit higher than wave 3, the all-time high? Or would that just be like wave 1 of 5? And so what the implications of that is, if wave 5 is just going to break out above wave 3, then we top out to 2023 and that's it, right? But if it's just going to be wave 1 of 5 that breaks out above the all-time high, at that point, all of a sudden it looks like we've got a few years of rally to go. So as traders, what does that mean for you? Well, it means, hey, you've got, potentially one more chance to make as much money as possible, but to do it intelligently so you don't lose everything you're making before we kind of get that final all-time high. Now, remember, the other way I've kind of been looking and discussing this is the fact that, we're looking at the tops of the indexes here as being super grand cycle, right? Or grand super cycle, right? And the thing about that is, because a grand super cycle is so many fifths of fifths, right? It's the fifth wave of the fifth wave of the fifth wave of the fifth wave of the... And so generally what we would expect, wave psychology there, is we would expect some sort of blow off top more likely than not. Just because there's so much exuberance from being so many fifth waves, right? But we haven't had that yet. We didn't have that in November for the Nasdaq, or January for the Dow or the E-minis, right? Or S&P, right? So since we didn't have that, I think it still leaves open until we get some significant move down. Like some significantly impulsive move down. I think that leaves the door open to the idea that we've still potentially got that coming, that kind of blow off top, that last hurrah kind of thing, right? So if we think about in terms of what's going on here, so the Bank of Japan, right, the yen hits that 50, 60-year low against the dollar, right? Bank of England hits that, what is that, 85, right? So is that 95, 05, 15? I mean, that's almost a 40-year low, right? Both intervening. What if central banks do enough intervening, right? And things are turned up there. So we've got one last hurrah, and then there's absolutely nothing anybody can do, and everything dies, right? At the final top, right? I mean, it's possible. It's something to definitely pay attention to. Now, I'm not sitting here being a doomsdayer and saying, oh, it's definitely got to happen. But, I think that would be kind of the scenario that we'd look at, right? I mean, everybody just kind of break down after that final all-time high blow off top kind of thing. And then you're talking about a depression. I know, you're probably talking about a global depression. U.S. based, we're probably talking 50 to 80 years of down, and then, a few years of down basically, and then probably another 50 years or more of sideways. Remember, this would be a bigger pullback, a bigger decline than what we saw in 1929, right, for the Great Depression, which was only 3 years down, but it took a quarter of a century almost, right, to break out to a new high. And so we're talking about a larger degree breakdown here. So it should take longer. But again, that doesn't mean you're going down for 50 years. It means you're going down for a few years, and then you're kind of just sideways for the rest of that time as everything starts rebuilding, right? Now, the best part about this, you're probably going, oh my God, that sounds awful, right? It wouldn't be great. But as traders, if you're really honing your skill right now, there's going to be so much money that you're going to be able to make during that time. And you'll be able to set your family up, your kids, your grandkids up quite amazingly So I don't know. I think if you're trading right now, I think you should be busting your rear end trying to get a system figured out, get it down, get it done right, get practice in there, so that you've got this ability to really capitalize on that when you need it, right? I think too many people right now are getting in and they're just trying to to make a few dollars here or there, trying to hit home runs all the time, and ends up leading to losses. But I think right now, if you're serious about being a trader with the potential of what that could mean coming up after that time, I think that you should really be practicing more or spending more time focusing on the system rather than how much profit you're making. That's what I'm trying to say. Okay. One thing that professional traders know, people that have been doing it for a long amount of time, the one thing we know is that it is systems and processes over profits, right? If you have a system or a process in place that works, the profits come. If you're always worried about the profits, then you're not really perfecting your system, which means you tend to start looking at trades singularly rather than all the same way, which is what you should be looking at them all the same way. That's one of the secrets of trading, guys. Stop taking every trade as something new and something different, something separate. You should be creating a system that works for you, that you can apply anywhere, and just keep using that system. The profits come. If your system's legit, the profits come. If you're trying to trade every trade as if it's the only one, as if it's the new thing, every time, then you're most likely going to lose money over the long run, okay? Big Vape says, yeah, that would be ideal. Melt up Q1 2023, then bottom in 2025. I mean, man, you guys, there's so much money to be made if you can trade intelligently during that time. And then you can just short the heck and make a ton more money on the way down, right? Yeah, whether it's cryptos or stocks or whatever else it happens to be, right? So yeah, a lot of potential there. Let me see here. Oil. Let's look at oil. All right. Oil looks like possibly we've got this 50% retracement here. So we're looking for a breakout above wave B resistance at 82.56. If we can get it, that's going to get us a wave 3 minimum expected target up there at almost $91. So we're going to see if we can get that rally up there. Obviously, if we break down below the swing low here at 76.25, that's going to what am I trying to say? Invalidate the count. That's what I'm trying to say. So we're going to see if we can get a breakout locally here above that 23.6 area at about 81.28. And then, we want to break out above this 82.56. If we could do that, then we should be looking up here around $90, $91, which would be easy money, right? Let's see here. Gold. Let's see here. So gold. See here. It looks like a possible ABC, and so we'll be looking for wave 4 to kick in here. It looks like a expanded flat. So I'm looking down here at around 1668 for wave 4, and then maybe gets us a wave 5 up here, a 5 of 1, right around 1690 and 90 cents. So that's what I'm looking for here. So we get an A down, ABC down, ABC up, 1, 2, 3, 4, 5. We should dip a bit below there, probably this high volume node area, and then see it rally back up. We'll want to see a breakout here above. This would be wave B here at 1684.40. Breakout above that'll add confidence to the count. Give us that target up there. Actually, you know what? Let me see here. If we get this, I'll look initially at that, but I think we'll probably be likely to get this 1694.90 area. I think would probably be the more likely target now. there on gold. So yeah, now this is really an odd kind of count here. So I'm not 100% on the count. It's just kind of really awkward kind of count. It's possible this could be maybe ABC is 1, 2, ABC is 3, 4, ABC is 5. So if we continue to break down through that wave 4 target there, I think we probably got maybe the 61.8 here, about 1662.70. And so that would just mean that we have a, again, 1, 2, 3, 4, 5 as a leading diagonal. And then we'd be looking for 3 waves down here toward that, initially toward that 1662.70. Maybe closer to 1659. 78.6 is interesting right there at 1656.80. But if it continued to break down, those are what I would watch. But yeah, so first we're going to look and see if we get a flat here for 4. And then rally up for 5. But again, if it does keep on breaking down into wave 1 here, then we'll assume that this is 1 and we've got 2 in progress coming down the targets. So yeah. Let me see here. Let me see here. We can't catch anything. Any thoughts on Bitcoin dominance? Yeah, let me see here. What's my chart? Let's see here. Shift in total disbelief, not even shilling gold anymore. So here we are with, this is the weekly here on dominance. And so if this is 3 and 4 here, then this is 1, 2, 3, 4, 5, which means it's done. It's technically done enough 5 waves down below wave 3 for wave 5 to be complete. So breaking out above wave 4 here, we'll say it's done, right? And so if we look at this range, I don't know, the range looks, you've got volume dropping off through it here. And, consistently lower at the lows, right? Which is, again, what I was talking about earlier, what you want to see, right? At these lows, the volume gets lower and lower. Less and less selling going on at the lows, right? So, yeah, right now I think dominance may be done as far as declining goes. Now, it's still above this. So we had this January of 2018, January of 2018 swing low here, that the week of 8th of January 2018. So basically, a week or two after the spot price bottomed, right? We have that there. And so here, you can see that we had this spike up here. Remember that June low? So right before the June low with Bitcoin, which was, I believe, around the 18th, so right around this area, we had this top out. And then we had, the low there, and then it's come down, right? So are we going to see this kind of rallying up now and see money start going into Bitcoin? So much money came out of it, went into alts and everything, right? Are we going to see that flood back into Bitcoin now, see dominance kind of rally up? That's what I'm looking at the moment. So we'll see what, what goes on here. Worst, I think, the other scenarios, this is an A, this is a B, and we get a C up here, probably to the 43.38% area, right? And then we'd say it'd be A, B, C. And so then this becomes 1, 2, and then we'll have 3, 4, 5, we'll have Bitcoin dropping lower. But usually at those Bitcoin lows, usually the money flows into Bitcoin versus, alts. And so, dominance, of course, rises. So, yeah, we'll continue to see how this plays out, but definitely looking like that potentially, right? Big Vape says month of January of 2018, I keep saying 2018, was most insane monthly alt season of all time. You think we will never see another month like that again? Are you asking me a question Are you making a statement? You guys, I don't know how old you are, but use your punctuation. I'm old. I don't know how to read without punctuation. I never know if you guys are asking questions or making statements. If you're asking me a question, do you think we will ever see a month like that again? I think anything's possible. There's a lot of weird stuff that we'll probably see happen just in the crypto market overall, or even in stocks, overall, if we've still got that all-time high coming. That last push higher into that all-time high is you're just going to see things just going kind of wonky, right? So I see people, who've been really pushing up gold for a while now, right? Talking about how it's been different this time, right? So gold should be rallying here, right? But it's not. But then I see them, instead of, they acknowledge that it's different than what it's been in the past, but instead of saying, you know what, listen, maybe the way we look at it isn't correct, they say, oh, but on the other hand, look at how it's held up, and there's always something, right? There's always some sort of narrative, right? You can look at it that way if you want. I just don't think that people tend to look at, I don't think gold, tends to move the way people think. Most people don't do a whole lot of research into it. It is with most things, right? As I've warned you guys against, don't get caught up in the sound bites all the time. Make sure you understand what you're repeating out there, right? So yeah, there's a lot of building going on right now. Big Vave's talking about BlackRock crypto ETF launched today in Europe. Yeah, there's a lot going on the building side over the last year, even the last half a year, especially, right? There's a lot of maneuvering, a lot of building, a lot of new things going on, right? These bigger things like BlackRock and and whatnot, allowing not BlackRock but other big banks, allowing their customers to trade Bitcoin in their accounts, right? Stuff like that. So these are a lot of big things that are potentially opening the doors to more money flowing in, right? So people have money. And they're like, okay, well, where can I get yield? Where can I get returns, right? And so, again, a lot of people are interested in Bitcoin. First of all, a lot of money's new money, right, rather than old money. And so younger people are more interested in crypto, right? But even those who are older a lot of times are still getting more interested in it because they've seen the returns on it, right? So having the ability to put that money in there when they're not getting really returns on anything else, or not comparable returns, they're getting much smaller returns on other things. That continues to be the draw to crypto, right? Especially after you've seen it come down as far as you've already seen it come down. And I think a lot of people miss that. I don't think a lot of people understand that when they're trying to say, well, why would anybody put some money in crypto? Well, I think that's why. Your potential for return is still so much greater than pretty much anything else. And we've already seen a huge drop in it, a huge decline in it, right? Sure, you can go put it in stocks, and some of the more older, stodgy kind of investors are going to do that, right? But if you're younger and you got money, you're probably looking to buy into Bitcoin here and thinking about 20 to 40 times your income, or 20 to 40 times your investment, right? You're not getting that in the stock market. Just not in general, right? Indexes or anything like that. There'll be some stocks that'll go out and make good money on, but I don't know. 20 to 40 is a lot here, in I'll push up in a couple of years or something. So, yeah. Common Man, what's up, man? He says, even if the greater trend is heading down, shouldn't we get a bounce at some point? DXY can't go straight up forever. S&P can't fall to zero. Haha. Where's the dead cat? Yeah, exactly. So I think we're probably looking at that right now, a minimum of that. But, there are those levels that I've talked about. And if we're breaking out through them, all of a sudden it starts looking more and more like, rather than a dead cat bounce, we're actually maybe getting a reversal. And again, that would kind of fill in that narrative of the fact that maybe the Fed pivots in 2023. Maybe they've finished their big increases. The dollars maybe topped out. The other currencies maybe bottomed out. So there's a lot of that, I think. All of that is all kind of happening. Man, I don't know. I think it creates a good possibility for a reversal rather than a bounce. But, again, you still got to go through levels, right? You still, it would be, people get out there and they're like, oh, well, so-and-so called this and so-and-so. And it's like, I don't know I don't think that's the correct way to do it. Because, you're hoping, right? You're hoping that maybe you get it right. And then you can go around, pound your chest and say, look, I got it right. I said it was definitely going to do that, right? But most of the time you're wrong. So that doesn't really help. I mean, that maybe helps them because new people come in and go, oh my gosh, look, you got it right, or she got it right. But, I don't see how that helps people who are genuinely following you and trying to get some semblance of what may be going on. Again, I think June is a good low. I still do. You guys have seen me buy in from there, right? But that doesn't mean I'm completely unaware of the possibility we could go down further, right? It means that I have validation levels that I've discussed with you guys, including this morning, that we need to see price going at. And if price does it, that increases the odds that I'm, more correct than not correct. But, if I was just to go, you know what? There's the bottom, right? How does that help you out if price actually breaks down further? You see what I'm saying? So I guess for me, it's more about giving you guys real information, real stuff to help you really kind of understand how to trade rather than just trying to get people to follow me because I can boast about one time I got something correct. Now, obviously, if you've been following me, I've got it correct quite a bit of times. Interest rates, bonds, Bitcoins, tops and bottoms and stuff. And I've got some wrong along the way as well. But my record is definitely a lot more correct than not correct, as far as what I think may be a top or a bottom. But even with that, it doesn't, again, even with that kind of record, it doesn't make a lot of sense to me unless I'm just trying to get people to follow me to say, oh, yeah, it's definitely a bottom or definitely a top. I think you go in and you say, listen, I think it's here and here's why, but here's what we need to see. Because that's actually how I trade. That's actually, I don't go in and say, oh, I'm all in at 17.5 and some change there in June, right? Why would you do that? If you're doing that, you're going to lose your money, period, end of sentence. There is no other way around that, guys. And I hope this is hitting home. I hope this is making sense to those of you that are listening. Because any Yahoo can go out there and say, hey, here's a system to trade and do this or whatever, or, can call a top or a bottom and hope they're correct. But, after doing this, I've been doing this since 1995. And absolutely nothing in doing that is productive for a trader, especially somebody who's newer, somebody who doesn't have a consistently profitable history of trading, right? Still trying to learn, still trying to get it figured out. It does absolutely nothing for you. But it gets you to buy, right? It gets you to buy whatever they're selling, right? So yeah, I think that's kind of the difference between me and most people out there. And fortunately, I make money trading. So, I make money from our business as well. But, if it wasn't there anymore, okay, I'm still good with trading. I think a lot of people out there, unfortunately, their business is where their income is, not their trading. And so they have to tell you what you want, what you think you want to hear so that they can have you buying so that they can make money. I just hope that comes across, guys. Let me see here. With regard to the Dow 30, we'll see previous pressure turn into support 2018, 2019. It took a while to break through 27.29. Broke down, maybe support in that area. Maybe, hopefully. Yeah. Well, we saw previous pressure. Yeah. Again, one of the biggest things I can tell you guys is always go to a larger time frame and then look left. Go to your larger time frame and look left. So if we go here, right? Watch. Oh, let me do this one. Nope. Where did my Bitcoin go? Is it that one? There we go. Okay. Even right here on the daily, if we look left, there's your support, right? But look at this. Look at that. There's your support, right? look left. Okay. Again, right here, if you were right here, yeah, you dipped down, but you found support in this area for a while anyway before it broke down. Right, the previous, right? Look where else this is. Look left. Always look left. And you look at that as support until it proves otherwise, right? That's how when we were talking about up here, when I was saying, based on sentiment and everything, it looked like we're probably getting a top here. It wouldn't have to be the top, it'd be a top. And I said we'd look for a price to target this area down here. Remember that? See if I can get this over here now. So we're looking at this area right here, right? That's kind of the target area. And so, again, it's where it was, right? So, yeah, guys, one of the things you can do for yourselves is definitely look left and pay attention on larger time frames where those significant areas are, the significant areas of support or resistance, right? Those are things you want to watch. Now, does it guarantee that it's going to be a bottom? No. But it says that we're, more likely than not to get a bounce in that area, at least before it continues lower, right? Same thing right here. If we look at this supply cluster right here, you'll notice the EQ provided resistance here at the end of December, beginning of January of 17 into 18. Over here, we got a breakout, found support right in that area. We're breaking out higher, and now we're finding kind of some support right above it, right? But I think, again, if this isn't any diagonal here, I think we could see a breakdown to this EQ here right around probably about 16,550 to 16,700, right around there. I think that would be a good target. That's the EQ of that right there. So yeah. No matter what chart you're on, always look left. Big, huge thing. You can get a lot of information from that. You tried looking right for a while, but it was surprisingly unhelpful. And he said, yeah. Usually nothing but delusional hopium on the right, Tell Your Writer says, for sure. Just kind of continue to look at these things. Now, if we're looking at the awesome oscillator here, what I find interesting about that is we've got this, what we would look here as a, oh gosh, now the names escape me. But where you have a dip here, and then you have a higher dip. And so that's a bullish, oh my gosh, what's it called? Bullish double peaks? Is that what we're looking at? Something like that. I'll probably remember it either right at the end or right as I turn it off. But usually, if you're using the awesome oscillator up here, you're kind of looking for these things where you get these on the bottom side of the zero line here. You're getting two peaks, one higher than the other coming after it. And usually that indicates you're going to have a rally up. You have the bearish peaks doing the opposite here on the other side there. So I don't know. Let's go to the daily here and see if we can find one real quick. Yeah, so like right here, you got this peak, and then you have this lower peak here. Is this peak and this higher peak here. It's not always going to be higher there, but when you see that lower peaks there, usually says we're going to head down. So yeah, potentially, even if you're looking at that indicator, that we may be heading higher, right? But, again, nothing I'm saying here guarantees that we will or won't or anything. It's just saying, listen, we're going to look at this and we're going to say, okay, does this make sense at the moment? Is it possible? Is this something that may happen? And that's what we're kind of looking at. Let me see here. So, yeah, okay. It's not really a divergence, though, guys. Because, again, you can do that and there won't be a divergence. So it might be like lower peaks on the top here, right? And you'll have lower peaks here on price as well. So often, many times you'll get that. But what you're just looking for, the lower peaks up here. It doesn't have to be divergence. If it's divergence, well, it's a bit more info, but it does not have to be divergent. So if you pull up your awesome oscillator, guys, and you're looking at, just look for either the rising peaks here on the bottom or the declining two peaks on the top. And most of the time that's going to tell you that price is going to, if it's on the bottom there, it's going to go up. If If it's on the top, decrease like that, it's going to go down. But again, remember, it does not have to diverge. And many times it won't diverge with price. Sometimes it does, but many times it won't. Okay? So anyway, guys, hey, listen, I'm going to get out of here. It's the end of the day, as far as this goes anyway. Oh, man. Again, guys, I don't know if any of y'all are going. Hopefully I'll see some of you guys over there at Web3 Expo. This is the first time I've actually been able to get out and do anything, meet people and whatnot. So I'm going to be headed over there on Sunday, what is that, the 9th? And I'll be there I'll leave Thursday, the, whatever that is, the 14th, I guess. Is it the 14th? Yeah, I guess that's when I'm leaving. Anyway, and so like I said, I've got a master class I'll be teaching with trading, and then I've got from what I understand, I'll be with a panel there with Scott and I think Crypto Burb there, and we'll be discussing trading stuff. So hopefully, if you're going to be there, you can show up to one of those, and maybe even kind of meet up somewhere, and then you can kind of see that I'm real. You can tell me how much you hate me, whatever it takes. Hopefully that won't be it, but some people is what it is, right? All right, guys. Hey, listen, I appreciate you guys so much. Thank you for showing up. As always, remember, the only thing you control in the market is how much you lose. That's it, guys. That's it. Contrary to what everybody thinks coming in, the only thing you control to any extent is how much you lose. Because you can't guarantee, you can't make the market move, right? But you can determine where you're going to get out, whether it's going with you or against you. So risk management continues to be the most important thing you'll ever do as a trader, day in and day out. Which means what? It means it is the one thing you should spend more effort on than anything else, right? If that doesn't make sense right now, think about it a bit. Let it sink in. Because once you figure that out, I'm telling you what, you're going to have so much more opportunity as a trader. Okay? All right, guys. Oh, we got this idiot coming in. Why are we going to buy views? It's so stupid. Anyway, I guess if I cared about being an influencer, I would, right? All right, guys. You have a great weekend. Take care. If you're in Discord, I'll see you guys over there in just a bit. Everybody else, and of course, everybody showing up, I'll see you guys next Tuesday, 11 a.m. Central Standard Time. All right? Take care.